And we're back. We are discussing Introtech. What's happening in the insurance sector? Can you actually access it using your mobile phone? And really, what opportunities are there for a consumer and a potential investor? To help us have this conversation, we have Barbra Chesire on the show. She's a director at AB Consulting and a co-founder at CoverUp. Barbra, welcome to the show.
Thank you very much, Mbithe.
Tell us about Introtech and what your companies do.
Okay, great. Hopefully I'll be able to demystify insurance at the end of it all. But just to talk very little about what we're doing, but probably we're going to focus on the industry as a whole. I'm a director at AB Consultants, and AB Consultants is, we've positioned the company as an independent market driver seeking to make insurance accessible to those who need it most, and specifically focusing on microinsurance and inclusive insurance. Yeah? And when I talk about microinsurance or inclusive insurance, I'm really just talking about making insurance accessible to the majority of Kenyans, which is, we'll talk about why insurance is not accessible a bit more, but that's it. And then when we're talking about Introtech, we have an app called CoverUp, and it's downloadable on the Play Store, and it makes insurance simple, insurance accessible on the phone, and end-to-end process. So all the way from purchasing to payments to making your claims. Oh, wow. Yeah, so we're really trying to demystify insurance, make it simple.
Okay.
And yeah.
And accessible.
And accessible.
Wow.
Yeah.
Okay, Barbra, CoverUp wants to democratize insurance, right? Is that right?
Well, we're talking politics.
But tell us, why is insurance penetration very low in Kenya? We're talking about just under 3% of in terms of gross written premiums as a share of GDP.
Yeah.
Is that, first of all, is that the best measure of insurance penetration? Is
I think for now it is, because if you measure it in any other way, for example, share of assets or anything like that, it may look bigger than it really is. And I think what we really want to decipher is what impact is insurance having on the common mwananchi out there. Yeah. And we could have many reasons about why insurance is not accessible to, why it's only contributing not even 3%, 2.6% of our GDP.
But why is it that low? What are the
factors?
And
it keeps shrinking, it keeps going between 2.4, 2.8. We don't even get to 3%, 3% would be a good year for us. I think one of the main reasons why insurance is not having the kind of impact we think it should is because I think we took a model from the West, a model of what insurance is. We copy-pasted it into our continent, not just Kenya, but the entire continent, because I think apart from South Africa, insurance penetration is low across most of sub-Saharan Africa. So we took this business model, copy-pasted it into our culture, not taking into consideration what are our cultural nuances, what are the price points, what kind of product design, how do we actually want to reach these products. And if you actually, and I hope no insurance company will come after me after this interview, but I think even if you look at insurance companies' documents, policy documents.
It's a very thick document.
Yeah, it's thick, it's big, it's fine print. Some of them have not even reviewed those documents since in the 1960s when insurance was kind of handed over to to us as Kenyans. Oh, wow. So I think there's a big problem when it comes to how the products have been designed. They're not suitable for the industry. And
Barbra, who designs these products?
Yes.
In the boardrooms?
Wow. So at AB Consultants, one of the things we focus on is actually market research. Okay. And from market research, designing products that actually make sense. Yeah. So most insurance companies, or rather I would say most insurance products, have been designed in the boardroom. That's my theory. I think I worked in the insurance industry for a very long time. And we designed products in the boardroom because you sit there and you say, I really, really think that this makes sense.
You imagine
what people want.
And I suppose then what contributes to that is the ownership of the insurance companies, because the top insurance holders, they're not locally owned, they're foreign owned, and in a way you must be able to deliver on shareholder objectives and returns.
That could be a reason, and I'll let the analysts probably speculate on that. That could be a reason, but I think it's probably probably, if you look at insurance companies, probably individually, they're making money, modestly. They're making their profits, and probably the hunger to really, to urge to really want to break those barriers may not really be so urgent. That's
they
what
don't have an extra incentive. I tell you why insurance are comfortable days. It's because motor vehicle third party is mandatory. Have you ever imagined a situation where we stripped off, we removed it?
But we are adding motorcycle now.
So
really, you're guaranteeing the income that you can actually earn without lifting a finger.
Even we've put import insurance as mandatory.
We're making it mandatory.
Aren't we not delivering business on a silver platter for insurance companies? So you're actually incentivizing innovation.
Exactly. And maybe I can add one more for you, Credit Life.
Look at Credit Life.
When banks give out loans, we're very lucky as insurers. We get the opportunity to insure that, and it really is not. You don't tarmac a lot to get that business. Really,
it's a silver chalice, Barbara. They just basically told, here's business.
Just create an entity, have the right connections, have the right networks, and the business will actually walk through your door.
Barbara, what's going to disrupt the insurance sector? Tell us.
Okay. So I think before we begin to talk about what's going to disrupt the sector, I think we need to maybe identify 2 or 3, 4 things that are, making insurance not accessible, and then we can begin to say what's going to disrupt these things. So we've talked about the fact that insurance business, I don't think we've talked about this, but insurance business as it is focuses on the top 3-4% of the Kenyan market, maybe 5%, who are the high income earners in our country. So mostly definitely employed, high net worth. The products are designed to suit this market. Then you come to the middle and lower middle income, and you'll find that there's a bit of the upper middle, which is majority of people who are in these buildings,
barely middle class.
So you're accessing insurance through your employer, but the moment you go below that, it's done. It's done. And when you ask why, first of all, I think insurance companies don't know how to reach these people where they are.
Is it that they're unable to price the risk, or the margins with that kind of consumer are just not necessary or worth the effort?
I think one of the issues is the distribution channel. And you see, for banking, it has worked very well. Even bank assurance has worked well because we're using the existing distribution channels within the banking sector. But when you look at how do you reach an SME, how do you reach a small business?
How do you reach an Gikomba trader?
How do you reach somebody in Gikomba? How do you reach a Mambaboga? So if you look at Mshwari and the rest, they've actually been able to figure that out. Or M-Pesa, they have a kiosk next door that somebody can actually just buy insurance. So that is one challenge. We've not been able to design the right products to access, right products and channels to be able to make an impact to majority of Kenyans. So I think if you look at Kenyans who have a disposable income, people who can actually have are running businesses, they have incomes, they actually have something that they can lose. And they actually say most people are a hospital bill away from bankruptcy. Why should that be the case?
That's very interesting.
So,
but Barbara, when you're talking about right products and channels, when you started the interview, you did say that your product design is based on research and then identifying a way to distribute. So how are you doing it differently from the traditional model, if we may?
Okay. So I was going to talk a bit about some of those issues and then come and talk about the channel, if you don't mind. So if we look at our processes, and then I'll come to actually the CoverUp and why it's different.
Oh, interesting.
So when we look at the processes, for example, of how do you buy insurance? George, if I told you to buy insurance today, what would you do? You'd probably call me,
I'll call you. Actually, to be honest, I'll be at a problem.
You wouldn't know where to buy. So the question is, there's also a process issue. How do you get people to know where to buy insurance unless you know somebody that you can call? There's the issue of fraud. So the few who are actually insured,
fraud.
They say insurance, the model of insurance brings out the worst in people, the worst in humanity, because every dollar that I'm paying you, or every shilling as an insurer that I'm paying you, is a loss on my end. And every shilling that you're not paying me is a loss on my end. So how do you change that business model, or so how do you change it so that you're encouraging good behavior to therefore lower fraud? And then of course there's the costing model around it. It's so expensive to have agents out in the field. You're paying them high commissions, upwards of 30 to 40%, and does it really make sense?
And commissions for general and life business? Or is it mostly for the general business that you get this high commission?
It's mostly in life. Okay. Life, because
the big tickets.
Big tickets.
Yeah, the big tickets, and also how life is designed, it's long term.
Okay.
So the insurance company has a longer time to invest that money and actually recoup the commissions that have been paid out in the first few years. But for general business, like your motor vehicle or your home insurance, the commissions are reasonable. They're low. They're 10%, maybe 15% for the higher medical and the rest. But it's all within the Insurance Act.
Okay.
So when you talk about how can you change insurance, what can you do? And I think I'd want to come back now to technology.
All right.
I'm sure right now, as we're sitting here, you can quickly go on your phone and send money or withdraw money from your bank account and
do so many things.
Yeah, and do so many things.
Bills, pay and do this. But I can't buy insurance on the phone, Barbra. What's up? We're
trying to change that.
Okay.
Yeah, we're trying to change that. So that's what CoverUp does.
Okay.
CoverUp is it's an Introtech platform. It's available on web app. So basically, you don't need to go into the Play Store to download it. On coverupke.com, you can get the web app. And what we focus on is very just simple products. Simple products that you don't really need to think and make a very long decision about whether you want to buy it. They're no investment products. They're just simple risk or emergency products. So for example, your vehicle breakdown cover, we have it on the platform. If you wanted to buy a third-party motor just for the next 30 days, you can get that there. We have a very simple home cover for 100 shillings a month. You just take the pictures of the items in your home.
Okay.
The current insurance process is that you must send in a proposal form that lists all the items that you'd like insured. Then they'll come back to you and tell you this is okay, and then come back to you with a quote. And we've tried to leapfrog over all those processes and just say, as long as you register, take pictures of the items, and pay through the platform, then you're basically insured. The policy document will arrive into your email, and you're done.
Are you the ones underwriting, or are you partnering with existing insurance providers?
Yeah, so we've partnered with existing insurance providers and emergency providers. So like AA of Kenya is not an underwriter.
Yeah.
Well, I guess they could be an underwriter in a way because they carry risk. But AA of Kenya, for example, provides the breakdown service on our app.
Okay. Yeah. So what you're doing is you're bringing the suppliers of this insurance and then creating a process that's very simplified, designing the products, and in a way creating the platform where George and I and anybody else can actually tap onto CoverUp.
Exactly.
And I don't really need to know who's behind it as long as I get the service that I'm paying for.
Exactly.
Okay, that's an excellent way of looking at insurance. Well done.
Thank you.
Well done.
Thank you.
No, but let's talk fraud. Medical underwriters are bleeding money. I mean, you must be aware of bleeding money. There are medical providers and motor vehicle underwriters.
Okay.
Motor vehicle, they've tried to come up with something, a shared database, where, because one of the problems with motor vehicles and the biggest losses are recorded in the private motor vehicle. And one of the things that the industry they've tried to do is to create a shared database where you have a situation where, because previously you have a situation where I can insure a motor vehicle with 3 underwriters.
Yeah, and then you can claim.
I can insure Jubilee, I walk out of Jubilee, I go to UAP.
Yes, you insure.
And then I go to CIC. And then I can actually literally make claims in a year out of all these 3 underwriters.
Yes.
So what they're trying to do is they've created a shared database where any underwriter, at the point of underwriting a risk, a motor vehicle risk, you can query your database, see whether this is already been insured, and then tells you, yeah, this vehicle has already been insured. Now that's the motor vehicle side. The medical side, it's still where there's a problem. They have a couple of initiatives. One is they came up with the smart cards, which were supposed to eliminate a number of these fraudulent claims. But then it's emerging that smart cards actually, most hospitals are running them offline basis.
Yes.
And the problem offline is that you can actually tamper with the bill. the final statement when you're sending to the underwriter. They're also saying that doctors should recommend generic drugs. Yes. Do you think these are things that, is there a much bigger issue here, or these are actually, whatever they're pronouncing can actually solve these things? Because for the general insurance, fraud is a big issue in their finances.
It is. It's unfortunate. Apparently, if you read the IRA report, it says there's no fraud. That fraud only contributes 2 to 4% of fraud in the insurance sector. That's IRA. But I think there's a big disconnect between what IRA is reporting and what's actually happening on the ground, because we all know. Personally, I think one of the biggest challenges we face with our sector when it comes to fraud is that the way the business model is, it doesn't encourage good behavior.
Yeah,
there's nothing that encourages you to say, you know what, let me be healthy, let me not try and collude with the doctor, let me not try and just use my cover when I have a cold. Let me live a healthy life. Let me not go to Aga Khan when I have a cold and spend 15,000 on my medical card when I know I'd have spent less than 1,000 if I was to buy a very simple Flugon over the counter. So how do you encourage good behavior? And then how do you cut out those? Because there are also cartels, especially I think in motor insurance, the cartels have really taken forth with the what are they called, the garages, the service providers,
the loss adjusters, the assessors.
But and I think we need to relook at that entire value chain for both medical and medical and motor, because those are the two that are really bleeding, and really look at the value chain and say, where can we intervene and where can we promote good behavior? And I'll probably want to talk about telematics and wearables.
But before you get that, let me just a question is, how much backward integration can it solve? Can we kill out that cartel if of the underwriters are to integrate?
And if you automate, is automation the key? Is what you're doing and what you bring into the project, is that a way to recreate or disrupt that market space?
I think your guess is as good as mine. Maybe if we tried it and then we see what happens. But I think if we could find, if technology could actually cut out some of the people within the value chain, I think first of all it'll make the processes faster and reduce the chances of fraud. When you have an agent, even not even talking about garages, but you have an insurance agent who has been given targets, the urge is to actually missell and tell you, if you buy this cover, your child's school fees will be paid from next year, and you'll pay premiums, but at least they've reached their targets. But how do you create business models that that promote good behavior? And there's a very interesting insurance company in the US called Lemonade. It's an Introtech, and they've actually rethought lemonade like lemonade. They say it's refreshing, so refreshingly new.
Oh wow!
And they've actually remodeled the entire insurance process and said, you know what, we don't want to be tempted not to pay your claim, and we don't want you to feel like you want to defraud insurance. So they've actually changed that whole process, and if you'd like, I can probably share the link with you.
Oh, that would be interesting. But now, if you come to Lemonade and a refreshing new way of looking at insurance, if I go to CoverUp today, or if I'm on the AB Consulting website, what products can I be able to access?
Okay, so do you have a cover for your home?
Yes. No.
Domestic cover.
No.
So if you went home and your TV was gone,
I don't watch TV.
Maybe you don't watch TV. You're the better most of us. Or something has happened. Something has happened to your electronics or your furniture. So we have we did research about 3 years ago to find out what do people really want to cover, and we're not asking people what insurance products do you want. We're just asking what are the biggest risks that you face. And we found that people actually told us that the things that are around them, their phones, their music systems, their fridge, and all that was really valuable to them. And if anything happened, they would not be able to probably replace them. And we asked them, do you know that you can insure them? And they said no. And another question we actually asked is, what do you value these things at? And this was a curveball, because people said 87% of people said they valued these things at 50,000 shillings and less.
Oh, wow.
And almost 90 something to 90, say 100,000 shillings and less. When we looked into the insurance sector, we found that most products were at a sum assured of 300, 1 million, 200,000 and 1 million.
Then there's the low penetration because you have a product that doesn't. Okay, interesting.
So we designed a very low end cover. It's 100 shillings a month. Okay. And you just get to insure the basic things around your home. So that's one. We also have what's it called? Third party motor for 1 month. It costs 1,500 shillings. You're getting into your vehicle and you realize, gosh, my cover has expired. I don't have enough money to renew my annual cover. You can renew that on cover for 1,500 shillings, and we deliver the sticker to you within maybe 30 minutes or less. For the home cover, your policy document is in your email within literally a few seconds.
Would I be right then to assume from what you're saying that the opportunities in the sector, if you're going digital, are more apparent in an untapped market because the products don't make sense? And certainly there's also upside in the motor insurance. Yeah. Right?
Okay, that's what we think. I think there's I think we've done our analysis and seen there's about 13 million Kenyans who are completely exposed to risk. They have income, they have assets, they have they're economically active. And we're thinking there's a big opportunity there for not just for the insurance sector to make money, but for people to actually be protected.
I think I agree with you. That's bad because when the statistics, the employment statistics in Kenya today are very grim. Like I was looking at the statistics for 2018. You have about, the Bureau says that we have about 2.7 million people who are in formal employment. Okay. Out of this, only 100,000 of them earn 100,000 shillings and above.
Yes.
Only 100,000. Yeah. And 100,000 shillings a monthly wage and more. You have about 13 million in the informal sector, plus another 2.5 million people in the white collar job market that cannot afford most of the products in the market. Because if you look at, for instance, if you look at the life side, insurance want to sell you a sum assured of excess of 1 million shillings, which means you have to, your monthly
has to be quite high.
Monthly premiums could be like 5,000-6,000 shillings.
Yeah. So in a way, insurance actually looks like a luxury product unless
that's what you made it look like.
But actually, I think that insurance, even the sales process, Barbara, I think they sell insurance is sold on our throat. I should be able to buy insurance like I buy something. Yes. Look at the sales process. I see the insurance agents just want to run away, I don't want to buy that product today. So I think that we have a problem, you're right, and I just want to echo your point. We have a problem with the distribution, the sales process, the products, and Barbara, with all these problems, why insurance still making money? Where are they getting the money for? They should, at least for the life guys, for the general guys, the short-term guys, I think that they don't make money. But because our market is short-term driven, short-term premiums are more than just about 60% or thereabout.
In your analysis, if I may, George, so when you say that the short-term business is not as profitable as the long-term business, if we circle into the NSC, then who are we saying is profitable? Who are we saying is unprofitable? Who's running a good model?
The problem is that look at the insurance company that are listed today. I think there are two problems. One is the reporting. Okay. Today they report results to the group, but thankfully the IRA, which is the regulator, has insisted that you have to separate the accounts, asset management, life business, and now they're even asking people to separate the deposit administration. So with the way they present the results, that all the bulk of the business which makes losses, which most, like for instance, I can tell most of the underwriters listed, they're heavy on the short-term side. But the results are camouflaged. The losses are taken over by the asset management results. And constantly they have to revalue the securities and say, revaluation gains. So if you actually, I think for me, my key takeaway for the investors is split those results. Look at the life business, look at the general business, look at the asset management business. You probably would not want to buy any insurance stock if you were to split those things.
But maybe we should look to Barbra and see if Barbra will raise capital, because she has an interesting model.
But you see, George, as much as you say that, I think insurance is the next frontier in terms of growth, if we can actually crack it. And there was a study that was done by, I think, one of these global insurance studies, and they actually said Kenya was identified as the top 5 in terms of opportunities for insurance.
For
and
insurance.
why? Because it's untapped.
Yeah.
Because there's people with disposable income who
Yeah.
need protection. And I think as much as it looks grim now, I think you should all be running to the stock to invest in insurance companies.
Potential market of like 15 million people who are still
Yes. And currently, I think voluntary policies are only less than 1 million.
So
In the entire,
Barbara, we have every year we have 2 fires in Komba Market, and I'm sure those traders are not insured.
yeah, no,
They're not
they're
insured.
not.
Are you going to go there?
Yes,
With
we'd love to
CoverUp?
go there. We'd love to go there. We'd love to go there with microinsurance, with CoverUp.
You can be able to go
that is
there.
actually the market that we're looking at.
So, Barbra, you're painting a very optimistic picture of
Yeah.
this sector, and I like that.
Yeah.
Can we come back to the element of capitalization? So you have a good product, you have identified the opportunities and the challenges, and we are certainly talking about the NSE. Would you see yourself taking a route where you actually come to the public market and look for funding, or do you have sufficient capital to actually meet this opportunity that you're saying is way up there and it just needs to be tapped in the right way? And it seems that you actually have the right model.
Yeah.
Do you have sufficient capital? Would you consider?
I'm hoping I'll actually leave here with a check.
With a check.
Yeah, from
Fine, we shall introduce you to NSA, Mr. Jeff Odundo. I hope you're watching.
There seems to be quite a big interest in the microinsurance space in Kenya.
Yeah.
In fact, there's a new regulation for microinsurance that's coming out.
Okay.
I feel bad that I've been saying this for quite some time, but there's a very high chance that this policy will actually come out very soon. There's an opportunity.
Positive. Okay.
I think it's largely positive.
Okay.
I was privileged to work in the team, in the working group that developed it with the regulator.
All right.
And I think there's a big opportunity for and I think this is what SACCOs, other insurtechs, because CoverUp is not the only insurtech in Kenya.
Yeah.
There are several other insurtechs, and I think our joy would really be to see these insurtechs grow as well, because if insurtechs grow, then the whole industry grows and the pie grows for everybody. So I think with them, currently in terms of capitalization to get an insurance license, I think you're looking at over 1 billion shillings.
That's just $10 million.
Yeah, $10 million. International market, huh?
Yeah.
And the new regulation for microinsurance is looking at a much lower. I think they're looking at, they said, about $500,000.
Okay.
So I think there'll be more opportunity for
Yeah.
for more players to go in. And even if you look back to a few years ago, there's a time when there were so many international players who came into our market. I think it really just shows where it's going. But I think there'll be a bigger, I think we'll see things changing within the next few years, or actually from next year when we introduce these new regulations.
All right, so some opportunities to look
Yeah.
out for there.
Yeah.
Okay.
Barbara, talking about regulation, just one last question on regulation. Insurance Amendment Bill, there's still a back and forth between the President and Parliament. But what they're saying in a nutshell is that agents,
Brokers, yeah.
is it brokers rather,
Yeah, brokers, yeah.
will no longer withhold premiums.
Yeah.
And obviously brokers have come out gun blazing.
Of course, you're taking away the bread and
Because
butter.
essentially the old, but at the same time, the underwriters are complaining that every year brokers fail to remit huge amounts
It's
of
true.
premiums.
It's true.
I think 2017 we're talking about 30 billion shillings,
Yeah.
which is a lot of money. I don't know the statistics 2018,
Yeah.
but there is a big complaint that
Yeah.
they're not
It
remitting
might even be
premiums.
higher in
I
2018.
think it could even be higher
Yeah.
in 2018.
Yeah.
They're not remitting premiums.
Yeah.
Do you think this is a timely bill?
Personally, I support it. I think it's timely. I think it's actually what the industry needs. And I think it will also force brokers to do what they're really supposed to do.
Originate
To be innovative, because
Yeah.
really brokers should also be driving innovation in our
They should.
in our industry.
They absolutely
But I
should.
think they found an opportunity to sit with money and probably, I don't know, maybe invest
Play
in
around
other,
with it.
maybe invest in other opportunities that come
Yeah.
their way before
Yeah.
they submit to the players. And that also brings a huge problems when it comes to trust, because people don't trust the insurance industry. Why? You pay your premiums to the broker, you go to the insurance company, they tell you
The policy
your
document
policy
is
was not paid, so your cover is not
I know,
active.
that's
You have
the
an
worst.
unfunded policy.
You know? Yeah.
So they don't.
So I think it's a welcome.
Yeah,
I think
it's a
in a
welcome.
nutshell, we
It's
welcome
welcome.
it as an industry. We look forward to it,
Okay.
and we look forward to actually seeing the industry grow because of that. Because the brokers will need to be more innovative. They'll need to do something.
To attract business.
Yeah.
Papa, there's a proposal the CS Treasury proposed in his budget the tuk-tuks and border.
Yes.
Third party cover
yes,
mandatory.
Yes.
What's your view on that?
Yes.
Do you have any view on that?
I support it.
You support
I think it's a brilliant idea. Of course, insurance companies are terrified. Some of them are scared
Because
of the
what?
kind of the current experience they have with the border market. I think it's largely been loss making, but I think the bill actually talked about providing a cover. It's basically a personal accident cover for the passenger, if I'm not wrong. Is that it?
Yes.
And I think
And third party.
yeah.
No,
and
actually, it's purely third party proposal for third party mandatory, making third party cover mandatory for
motorcycles.
the motorcycle, the passengers,
Yeah.
and the pedestrians that they might
Yes.
hit.
So I think there's we'll see some interesting innovations around that
Around
space.
that.
I think there's
Okay.
been proposals around doing something like telematics for
Yes.
motorcycles. So if I'm able to track you as a border rider, maybe I can actually influence how you drive, influence your behavior, and therefore be able to give you better rates. So I think it's brilliant.
Is
I
it
think we
risk?
should
Do you
put
think
some
that the most underwriters will take that risk?
I think there are already underwriters taking on that risk.
Yeah.
There are companies that are underwriting motorcycle, and I think the insurance is all about, it's a law of large numbers.
That's
so the
true.
bigger the pool,
The
hopefully
better.
the better. Yeah.
Okay, interesting. So, as always, we never have sufficient time. We need to have you back.
Thank
But
you.
just before we close, what's the one thing that you think we haven't discussed today and we absolutely must pay attention to if we're talking about Introtech or insurance as an investment opportunity?
So if there's one thing, and maybe I hope I can get another opportunity to
Please
come and
come
speak
back.
with you guys, is
We're hosting you next week.
on data science.
Okay.
If we look at the banking sector and we look at fintechs, of course they have their downsides, the mobile lenders and all that, but they've been able to leverage data and the credit scoring using data science to make. Right now I can sit here and get a loan on my phone.
Yes.
Yeah. So I think that's an opportunity for the insurance sector. How can we leverage data? Because we've been collecting data for the last 100 years, probably, if not more, even here in Kenya. How can we leverage that same expertise to unlock some of the potential in insurance?
Interesting.
So I'd be happy to delve into that a bit more. I don't have the answers, but I'd be happy to discuss it.
Oh, brilliant. We will be more than happy to have you back.
Thank you.
George has been looking at the insurance sector on the NSC. I don't know what your final comments would be for this afternoon.
I think I would be very bullish on any insurance company or underwriter that is moving to the digital space and utilizing especially data science to innovate and produce more innovative products.
Yeah.
Wow.
As it is, I only buy insurance because the mandatory ones. But otherwise, for now, keep off banking insurance stocks
Till we actually see them demonstrate.
till you see some traction on the technology side.
All right. Thank you very much. Ladies and gentlemen, so today we have actually taken a deep dive on Introtech. Now you know that you can be able to access some products off your phone on CoverUp, something that Barbra Chesire has been founding on. Look out for more information on this. And always, when we are speaking about the NSC, we need to see the insurance companies demonstrating that they're taking the route that Barbra is taking. Otherwise, if we continue the traditional business, it may not work out for us. Thank you for being with us this afternoon. We shall close the show and hopefully see you again tomorrow morning. Look out for the highlights for what happened on the NSC today. Good evening.